Now for our feature story of the day, Bitcoin Policy Institute just proposed a $2 trillion bit bonds to slash the U.S. debt, proposing the United States to purchase 2.2 million BTC, which is a multi-billion dollar purchase of $200 billion. So let's break this baby down. And again, welcome everyone just joining us. The Bitcoin Policy Institute has developed an innovative framework to minimize the U.S. national debt through the Bitcoin Enhanced Treasury Bonds. The plan recommends that the U.S. Treasury should issue $2 trillion worth of the bit bonds. Good Lord. The proposal aims to reduce federal debt and enable institutional and retail investors to access exposure to the pretty little bitty going up forever Laura. So here's the bit bond proposal. Pay attention. The proposed bit bond structure will redirect 90% of the proceeds to finance the federal budget. The plan devotes 10% of the proceeds to the bitty purchases for the strategic Bitcoin reserve without additional burden to the taxpayers. So I guess it would also be a neutral way to purchase Bitcoin, because they said they weren't going to do it with the taxpayers' dollars, budget neutral. This approach helps the U.S. government control the debt and create the long-term value to the Bitcoin price appreciation. It's going up forever, Laura. The proposed bond issuance delivers 1% annual interest rates, which are much lower than the current Treasury bonds. Investors who accept low returns would obtain access to the Bitcoin-linked profit when the bond matures. Investors will get 100% of the Bitcoin gains up to a fixed annual return limit, while the government will retain any excess gains. And here was the B-Bonds framework, which was shared. I'm going to read it to you. Bitcoin Enhanced Treasury Bonds operate similarly to the conventional Treasury securities, but with an embedded Bitcoin component that transforms the risk-return profile. The U.S. Treasury would issue the Bitcoin bonds with a stated face amount and maturity, for instance, of 10 years. And unlike traditional bonds where the proceeds go to the general funding, a fixed portion of each bit bond is used immediately to purchase Bitcoin for the Treasury strategic bitty reserve. The remaining majority of the proceeds, 90%, still finances government operations in the usual way. And figure 3 shows building the strategic Bitcoin reserve. And as you can see, 200 billion, 10% of the 2 trillion, and they're looking to acquire 2.22 million BTC at an average Bitcoin price of 90,000. And obviously, the lower the bitty price, the more Bitcoin in which could be acquired. So under the structure of 2 trillion worth of the bit bonds were issued, roughly 20% of the 2025 refinancing needs, about 200 billion, would then be invested into the bitty, securing approximately 2.2 million of the bitty at a 90,000 hypothetical price for the National Reserve. This allocation balances strategic Bitcoin exposure with a conventional Treasury functionality. The Bitcoin Policy Institute proposes 2 trillion bit bonds to slash that U.S. debt, and it's roughly 37 trillion. Under the stable Bitcoin market, the Treasury would save up to 354 billion at the current market value. The potential of the Bitcoin value appreciation could reduce a substantial amount of the national debt by 2045. This framework provides avenues to decrease substantial debt without decreased taxation or reduction in the public expenditure. So virtually a 20-year play is currently 2025 to 2045. Let me know your thoughts on this. Now, tax exemption benefits. The Bit Bonds framework proposes tax exemptions upon interest and returns earned from the bitty value appreciation. This makes these bonds more attractive to drive the retail investor participation. The policy framework indicates that 132 million of the U.S. households could invest an average of $3,025 each. Institutional investors and foreign buyers are expected to purchase 80% of these bonds. The other 20% will be allocated to the U.S. household sector. The allocation mechanism ensures broad investor participation and supports large-scale institutions. The bit bonds rollout consists of 3 defined phases. The first phase consists of a pilot operation, issue 5 billion to 10 billion in bonds. The second phase includes a legislative action and a full integration into the Treasury standard bond issuance schedule. Now, the government will purchase the Bitcoin through dollar cost averaging from different sources to reduce the potential price volatility. DCA all day, every day. The sailor put. Moreover, the proposal includes secure custody protocols, regulatory coordination to define the classification of the bonds under security and tax laws. The Bitcoin Enhanced Bond Initiative follows Executive Order 4201, issued by the Trumpster himself, our POTUS, on March, back in 2025, earlier in the year. Last month, to be more precise. The executive order classified Bitcoin as digital gold, creating the framework to expand the U.S. government's Bitcoin reserves. This proposal expands these reserves through the public bond sales without the additional taxes. Now, the projected U.S. Bitcoin reserve growth indicates it will achieve trillions of dollars in value by 2035, 10 years out. Under the most conservative predictions, the government-held portion could exceed the current U.S. gold reserves. Let's go. The Bit Bond Initiative positions the United States as the pioneer in the Bitcoin-based sovereign finance and financial stability. And if you don't know, now you know. What are your thoughts with the Bit Bonds? $2 trillion to slash the U.S. debt. And again, The bigger numbers at play here, 10% of that 2 trillion would be a 200 billion Bitcoin purchase, giving us approximately 2.22 million BTC at approximately $90,000 per biddy. Let me know your thoughts on that, and I'll read your comments out loud. Welcome everyone to the Q&A segment of the live stream. Now I can breathe.